Okay, we're going to do our update on these 13 quality stocks that, are all down at least 30% from their all-time high, much more in many cases. But they're all, most of them quality companies, a lot of them household names. And so they're going to set up a great buying opportunity at some point. And so it's a question of knowing what that looks like, knowing when to kind of pounce, right? And so we'll continue to go through these. As I mentioned, I'll be doing an update every week. I know my last update was more than about a week ago. So there has been a little bit of change. So we'll start with ServiceNow. We'll always cover these in the same order. So let's start with the highest time frame first. So important to note, ServiceNow was one of those where it had actually made a new low on the yearly chart. So again, this chart, every candle is one full year of price action. So this candle right here is the whole year of 2021. And this is our current year, 2022. So you can see it's a big fat red year, not great. The last red year that closed red was actually 2016. So this thing has been kind of straight up, no real pause. I mean, if you're looking at this yearly chart, there are obviously pullbacks in here. Any of the wicks are pullbacks for the most part. I mean, yeah. So important to note, it was below last year's low and it's now recovered that level. But we're still going to want to watch that. That level is 444.80. Excuse me. That level is 448.27. And if the market is going to take another leg lower, which I suspect it will, that's going to be an important level to watch. That could be what opens up the floodgates, maybe all the way down to 290 even. But important to see this progress. And now we'll move to the lower time frames because that's how this works, right? This is the highest time frame you can really kind of look at, the annual chart. I mean, theoretically, you could build a custom chart that looked at decade-long candles. That could be interesting. Look at the S&P. I don't think TradingView lets you do that though. It doesn't seem to let you go higher than a year for whatever reason. And so, looking at the monthly chart, you can see, man, it's been a lot of red months in a row. But what do we see here, right? This is the potential first green month out after 1, 2, 3, 4, 5, 6 green months in a row. 6 green months in a row. And so this made a new low. This made a much bigger low. This was consolidation. Now we made another new low. And this one made a nice big low, swept out all these longs. So what happened here is that all of this progress that happened all of these months, going back to all the way here, right? Let's see. Basically, so that's important to understand, right? If you bought at any point since August 2020, right? So that big rally we had post-COVID, you're underwater, right? The price was lower than where you could have bought it at. But we're now getting our first green month in a while. And because there are only a few days left, there's not much time for it to screw this up. So you would imagine this does close green. We get some follow through next week. And then the level to watch, the real level to watch here is the high of this month, which was 501, right? So we get above 501. That makes May a monthly swing low. And it creates the potential that this is a long-term bottom. I say potential because that's all it is. It's a chance. You can't have a long-term bottom without a monthly swing low, but you certainly could have a failed monthly swing low. So be careful. I mean, here's an example, of a failed monthly swing low, right? This. Well, actually, that is not an example because it came back. This is an example of a failed monthly swing low. Actually, this is important to see these. And again, this goes back to how candles form. And this is more basic stuff, but it becomes actually strategically important. If you understand how a candle forms, you know that this candle was bright green at one point, right? So this is February 2021. We know that was the massacre, in growth stocks in general. This candle was bright green. We had made a nice higher high above this high, and then we just failed. We didn't make a new low below this low, but then we finished the job the following week. So this looked like we were making upward progress and we were leaving a low behind. This was a swing low, right? A low, but we actually failed and we made a new low below what was going to be the swing low. So just be careful. It's important to spot the swing lows, but risk management to make sure that you're not getting caught in the downdraft. So that was the monthly chart. And looking at the weekly chart, we have this big bullish weekly candle that created that. Like, this big weekly candle is what is giving us that green month that's going from red to green, right? And if we look at the daily, that's really these last 3 days, right? There's a slight gap up. So we may get a gap fill. But you can see this little, like if I zoom into the daily chart, this consolidation here definitely looks like a bear flag, but it may be a bear flag that failed, right? Failed meaning it was setting up for more downside, but instead we get a move higher, because it does look like we're going to at least test 501. What happens when we get up there, how we react to that level is going to be what's really telling. But if you think about it from a daily cycle perspective, this would be day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? This day being your daily cycle low from the previous cycle. And what we're assuming right now, right, is that it's a weekly cycle low as well, right? That this was your weekly cycle low. We had an inside week last week, but now we've gotten the bullish follow through that we need. So if you were inclined to go long anything, ServiceNow is definitely looking good. It's good that it recovered that low from last year, but it's important to note that it made the low in the first place, because not everything did that. And so I would say this is probably not the best option. Okay, so we'll move to Workday. Yikes. Oh my God. Yeah. So if we start on the annual chart, okay, so this looks more and more likely that it's going to make its way to 110. I guess it had a bad earnings, I'm guessing, because you can see in this like panel, everything is green today, and it's the only red one. So that's like really telling. Still in decline. So this is massively underperforming the market. Yet we are getting a hammer today on the daily, so we may get a short-term bounce, some short-term relief. But this is not looking good. If anything, any bounce we get from here, this actually could be a pretty good short candidate. I'm going to write that down. Okay, so moving to Amazon, I said in my last video, this one looks like it's headed to 1600, the 1600 area. We got a nice wick down. This is a monthly chart, but look at the annual charts. We'll just start there, just to be consistent. We're still way below last year's low, actually. Yikes. That's what is that? That is 2881. So now, that's a pretty good distance. So I wouldn't be buying Amazon here, I guess is what I would say. I think there are a lot of other opportunities. It's week 9 of the weekly cycle. So still another 11 weeks to go before we would expect any major low. And I mean, look at this daily chart. God, this is ugly. This kind of grindy action. And today we have what looks like a topping candle. Another potential short candidate. Because the way I think about it, I'm expecting the market to roll over in general. And so that would mean that the weakest stocks are going to roll over first. So that should be your sort of short candidates. Amazon is definitely one of those. And really the QQQ in general, right? The whole sort of NASDAQ. IS, and a lot of these fall into that category, right? So this is Intuitive Surgical. Also made a new low on the yearly. This absolutely looks like a bear flag. But at the same time, we do have a weekly swing low in place. So above 224 is a weekly swing low. So do with that what you will. Intuit, well, this is looking pretty promising. So this just made a new low on the yearly, and now we're getting some, a nice little rally. So this would be day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is looking pretty promising. I mean, you'd expect it to at least make a move back. That would be aggressive, back to 500. That would be, I would say, 450 at least, which is still a decent amount of upside considering we're at 420 right now. Thereabouts. Nice strong weekly candle. We have a couple more days of the month. I guess the markets are going to open on Tuesday. So depending on how that plays out, we could close the month green for the first time in several. But notice we had this little teaser of a green month. And think about what that looked like in real time. That's important. I won't belabor the point here, but this was a low, hammer-ish, kind of, sort of. You could squint your eye and say it is. And then we got followed through that following month, right? This made a higher high above this high, right? And this was a green candle. We know it opened here. We know it opened here, and we know it went all the way up here, so it was nice and green. And then it just failed, right? And so this could end up being a greenish candle that looks like this, and we'll have to kind of watch for, something like this. Just be on guard. Domino's Pizza. Woo! Nice green monthly candle. So this one notably never made a low below last year's low, and so it's outperforming. That's not true. Wait, did it? 319.71. Yeah, it did not. 321.15. So it came within $3 of making a low below last year's low, but it did not, and that is important. At the same time, Domino's Pizza is not what I would want to. This definitely looks like a nice little double bottom, some symmetry. This is the weekly chart, and again, this monthly candle looks very bullish because it sets up for an easy monthly swing low next month for the June candle. So if you were inclined to be long, Domino's Pizza is looking actually pretty interesting. It is looking very technically strong. Starbucks. Ooh, that's an ugly candle. Yeah, from the monthly chart. We are way below last year's high. This is a puker. I would stay away. Let's see. Do we make, the aspiration is that we make it back up to 82. I doubt we get all the way up there. I could totally be wrong. This just doesn't look promising. And if anything, I would say this could set up as a potential short candidate considering how far below last year's low we are. And to think about that, if we're below last year's low, that means anyone that bought at any time last year, no matter when, even if you got the best possible price you could have gotten in 2021, it is a fact that your position is now underwater, right? You can't possibly have a winning position from what you bought in 2021. Now, maybe you've been averaging down, what have you. But that's important, right? Because that means there are groups of interested sellers that are trapped above and want to get out, right? So as we see upside, like potentially to 82, there are going to be people that are like, I wish I had sold up here. I didn't sell after this reversal. I let it just get away from me. I'm not going to make that mistake again, that sort of thing. So I would not be playing with this one. If anything, I'm watching the broader market for signs of bottoming before really looking at any longs. Adobe, actually green on the monthly candle, so very similar to Domino's, except in this case we did make a pretty sizable low below last year's low, so not as strong. Salesforce, still way below last year's low. Yikes. Could be, look at this chart. It just looks like we're making a move to 113, right? Like the odds, I wouldn't want to bet against a move to 113. There's no reason for me to do that, right? Autodesk, green monthly candle. That's nice. That's big bullish weekly candle. Let's zoom in on that. Look at these candles. These are inside candles now. This candle broke the range of all of these. So we kind of consolidated down here. And now this is telling us we want to go higher. This is a short week. Next week is a short week. This is a long weekend. So it's very light volume. And so this could absolutely be an outsized move that's going to be reversed next week. But we'll know what we'll be looking for, right? We'll need to reverse this entire enormous candle. So think about that. What we would need is an enormous red candle to kind of counter it. Or, obviously, several smaller red candles over many weeks. But this is a pretty strong foundation to sit on top of. But yet, we're so far below last year's low. And this is why looking at multiple time frames is so important. As bullish as that weekly looks, it gives me great pause that the low from last year was 225. And we're sitting here at 198. So I'd love to see how we react when we get to that level. Again, think about those interested sellers. Vive. Ooh. Notice the big difference here, right? This monthly candle is very far from going red, or excuse me, green. It's still pretty red. We have had a rally for sure. We have this long lower wick, but it's still a lot of work to do. And on the yearly, well below last year's low at 241, we're sitting here at 172. That's bad news, bears. That's not a good risk reward. Facebook, well below last year's low. My goodness. What is that? That's last year's low sits at 245 more or less, and we're sitting here at 193. Yeah, I mean 139. Wouldn't be surprised to see this trade down to there. And finally, AMD. Ooh, nice green monthly candle, and the yearly actually never made a new low. It still stayed inside. So this is actually showing great relative strength. I'll just look at SMH really quickly because I think that's an important contrast. So SMH got much closer to making a new yearly low than AMD did. So AMD is massively outperforming semis as a whole. And notice semis made a new low this month, whereas AMD did not, right? Yep, AMD stayed an inside month and green. But QQQ is not green on the month, right? You saw that big green candle for SMH and this red candle for QQQ. That just tells you where things are diverging. Software, like semis seem to be doing better. And if you think about now as a proxy, service now, I guess let's look at PSJ, which is a software ETF. Okay, that's closer to green. And this is actually a very nice structure. Higher high, higher low. Maybe a higher high up here, then come down, make a higher low, then up, then up. This is actually looking pretty nice. I'm gonna write this one down. So that's an important trend to keep in mind. Software and semis seem to be leaders within the tech the tech sector. So PSJ is one big ETF, and the other one is IJV, I believe it is. No. IGV? Wow. Yeah, that's what it is. So that's your other sort of software ETF. There's a different mix of companies. This one is still well below last year's low. That's important to know about. I think PSJ was as well. So PSJ actually is outperforming IGV. That's good to know. Wait, that's not the right ticker. PSJ. Oh, excuse me, that's PSG. Right, so PSG is still well below last year's low. So while short term they're outperforming the Qs, long term still a lot of technical damage. I mean, this is a giant swing high on the yearly chart. That's not a good look. And so that's the way these stack up here. I'll continue to give updates throughout. As I keep saying, I think we want to watch for the broader market to stabilize, or at least I will be before looking at too many longs. If anything, I'm more focused on potential short opportunities for this next leg lower. Assuming we get it, right? I could always be wrong, and in that case, I want to reposition myself to be long.